Hey guys, welcome back. It's that time again, midweek. Ponce Speaks. I'm Ponce Lemire, financial advisor, retirement specialist, and your favorite insurance man. And today, I want to talk about a topic, and this may go a little bit longer than my normal midweek Ponce Speaks because it's just so much misinformation that I'm hearing, half information, but yet so many people are interested in this topic and in this concept because it really is. It's an awesome concept that, if utilized properly, can be a very valuable tool towards saving for retirement or saving for any type of life event in the future. And what I'm talking about is universal life, or a lot of people call it IUL, indexed universal life. There are a few. You've got indexed universal life. You've got fixed universal life. You've got variable universal life. So, it's really important to understand which type of universal life that you're looking at. But the thing that's so compelling to everyone, as it should be, is the way that you can utilize a universal life policy to grow cash value, tax deferred, that can later on in life be accessed tax-free. I'm going to say that again. With a universal life policy, you can accumulate cash value in that policy, tax deferred, with no risk of loss, meaning if the stock market tanks or crashes, you don't lose a dime in your cash value. Now, we're talking indexed and fixed here. Variable works a little different. But you can't lose money if the market tanks. That money grows tax deferred, and then later on you can access it tax free in the form of a loan. And then, of course, at the end of the day, it's still life insurance. So if a person passes away, then their family or whoever their beneficiary is going to receive a lump sum tax free benefit, which is really, really awesome. But the thing about it is you have to know what you're doing. The policy has to be what's called properly funded, meaning you want to make sure you're putting enough premium into the policy that, it even makes sense to be able to cover the cost of insurance as well as the other administrative fees that are associated with these policies. And a lot of times people purchase these universal life policies thinking they're going to grow, all this cash value that they'll be able to access as a loan later, or surrender the policy and take the cash. But unfortunately, they are not funding it properly. And when your policy is not funded properly, then you run the risk of that universal life doing the exact opposite of what you wanted it to do, and actually drying up and later on lapsing. If you're not putting enough money in to cover the costs of insurance and the administrative fees and the other things, then that policy could potentially lapse. So you want to make sure that you're properly funding your UL so that it can grow that cash value that you're looking to use that policy for. You want to be aware of the way that you can take the money out later. There's two ways you can do it. You can either take it out as a loan to yourself, okay, and that's the way that you're able to access that money that you've accumulated over the years tax-free, is by taking the money out as a loan. Now, if you surrender the policy, meaning give it up, meaning I don't want it anymore, I'm going to just give this policy up, I'm going to surrender the policy, then you can get the cash accumulation, the cash accumulated value at that point as well. But in that case, you would have to pay taxes. And not only would you pay taxes, but you no longer have the policy. Versus if you take the money out as a loan, you still have the policy, which means that if you pass away while that loan is out, then the family would get the difference between what you borrowed plus interest, because it's still a loan. So yes, you still have to pay interest, somewhere to the tune of about 6 or 7% on the money that you took out. But whatever that amount comes up to, the money that you took out as well as the interest that is accumulated, that amount is going to come off of the death benefit if the person passes away. Okay, so those are the two differences. You can keep the policy, take the money as a loan to yourself, tax-free, but when you pass away, then that money is going to come off the death benefit. Now, you can pay it back as well. So that's up to you. You can also pay that loan back. Versus if you surrender it, you don't have the policy anymore. So if you pass away, the family gets nothing, but you walk away with whatever that cash accumulated value is, less taxes. Okay, so you want to go into it understanding what your exit strategy is going to be. Because at the end of the day, full disclosure, universal life, index universal life, we don't want to use it specifically as an investment because it's not. It's not an investment. It's a life insurance policy, period. But it has a nice cash accumulation component that, if used properly, can be a nice addition to your overall portfolio. Okay, so it's a very high level. Didn't really get too far into the weeds with it, but at least wanted to address some of those preliminary key points when it comes to utilizing universal life as a retirement savings vehicle for the cash accumulation value. For it could be used, that cash could be used to fund college expenses for a child. There's no rule that says how you have to use that money. But you just want to make sure that it's properly funded. You want to make sure that you understand the tax consequences that are associated with it, as well as the your end game, your ending strategy, and how you're gonna utilize that cash value. Okay, but again, at the end of the day, it's life insurance. We want to make sure that we've got a policy that if we pass away, our family can have money to take care of those final expenses, whether it be a burial, a cremation, maybe estate taxes, maybe replacement of income. If I pass away and I'm the main source of income in our household, then I want to make sure I've got enough money in that death benefit to allow my family to continue to live at the level of lifestyle that they've been accustomed to, at least until they can figure out another situation. Okay, so again, that's another edition of Midweek Ponce Speaks. I appreciate you guys for watching, for supporting. If you have any questions, or you want to talk to me directly, you can always drop me an inbox. You can message me, or you can send me an email at poncelemire@gmail.com. All right, so I'll see you guys next week.